Namaskar, dear retirees and friends. In this video, a humble attempt is made to explain in simple and systematic manner the present legal position on tax exemption for leave encashment, both prospective and so-called retrospective, especially for those who retired after 1st of January 2016. The present discussion is based on CBDT notifications, bank retirees circulars, detailed legal notes, draft condonation formats, and recent ITAT and departmental orders shared in different WhatsApp groups. So, let us not discuss what is leave encashment. I think all of us know what is leave encashment. The thing is, who are we talking about? We are concerned mainly with non-government employees, including bank employees. For central and state government employees, the rule is different. Their leave encashment on retirement is fully exempt. What changed recently? Earlier, the exemption limit for non-government employees was rupees 3 lakh only. In 2023, CBDT issued a notification number 31/2023 on 24th of May 2023, raising this limit to rupees 25 lakhs with effect from 1/4/2023. This is the starting point of all the confusion, especially about whether this benefit can go backwards to retirees from 1st of January 2016. Now, let us first see the clear undisputed law, where there is no confusion. From 1st of April 2023 onwards, for non-government employees retiring on or after 1st of April 2023, the exemption on leave encashment is up to rupees 25 lakhs. Subject to the normal formula of Section 10(AA), second, for 10 months average salary, that is the unutilized leave balance, etc. So, banks and employees are already applying this. As noted in the circular of All India Bank Retirees Federation dated 17th of December 2025, banks started giving the rupees 25 lakh benefit from financial year 2023-24 onwards. For these retirees, there is generally no need for litigation or condonation. The relief is automatic. Now, prospective means forward-looking. This is called prospective application. The new rupees 25 lakh limit clearly legally applies to those who retire on or after 1st of April 2023 and is accepted by CBDT, banks and income tax department. So, for new retirees, the position is very simple and favorable. Now, the real debate is for older retirees, especially between 1st of January 2016 and 31st of March 2023. Many WhatsApp messages and even some organizational letters suggest that the effective date is 1st of January 2016 and that all retirees from the date automatically get the rupees 25 lakh exempted. This is not what the actual CBDT notification says. So let us break down what is actually happening. The default position in the statute for retirement before 1st of April 2023, the notified limit is law, remained rupees 3 lakh only, because notification 31/2023 clearly states it comes into force from 1st of April 2023 and there is no fresh CBDT order giving automatic benefit from 1st of January 2016. So, what is favorable? Several benches of Income Tax Appellate Tribunal, Jaipur, Agra, Ahmedabad and now Mumbai have held that the enhanced rupees 25 lakh limit is a beneficial and clarificatory provision and can be applied even for the earlier assessment years such as assessment year 2019-20, 2021 and 21-22. For example, the Mumbai ITAT in the case of Balakram Hirachand Lohana relating to assessment year 2020-21 and retired in 2019 allowed full exemption of around rupees 9.38 lakh, relying on notification number 31/2023 and earlier Jaipur and Ahmedabad decisions. But on the contrary, the High Court Patna had the opposite view. The Patna High Court in Purandar Shekhar Sinha has held that the enhanced limit is only prospective from 1st of April 2023 and has refused retrospective benefit for earlier years. Presently, what we can say, no All India order from Supreme Court or CBDT. So at present, there is no Supreme Court judgment and no CBDT circular which grants a prospective rupees 25 lakh exemption to all retirees from 1st of January 2016 onwards automatically. So when people say benefit is from 1st of January 2016, they are actually relying on case-by-case ITAT orders, not on a universal change in the law. There is one more thing to be noted. That is about time limits and condonation. There is a 5-year wall. Even if we assume for argument's sake that the ITAT view can help other older retirees, there is a practical wall, that is the time limit. The normal time limit has already expired. For many retirees, the time to file a normal revised return under section 139(5) or an updated return under section 139(8)(a) has already expired. So, what is the special remedy? That is under section 1192(b), that is the condonation of delay. The only route left is to file a condonation application before the jurisdictional principal commissioner or commissioner of income tax under section 1192(b), asking permission to file a late revised return to claim the higher exemption. CBDT Circular 11/2024 generally restricts such condonation application to 5 years from the end of relevant assessment year. So, for assessment year 2018-19, the window under the new rule would be closed. For example, Rajkot PCIT rejection. In the real case of Kalpana Ben Bimal Kumar Shaw, that relates to assessment year 2018-19, the Rajkot PCIT rejected the condonation application filed in November 2025, simply stating that it was beyond 5 years, therefore cannot be entertained, and is treated as dismissed. This shows that time bar is now the biggest obstacle for earlier retirees even before the question of retrospective benefit is considered. So, who realistically has a chance? That we have to consider. Based on the document and orders, realistic, honest assessment looks like this. Group A, that is the persons who retired on or after 1st of April 2023. For these retirees, law is very clear and automatic. Rupees 25 lakh exemption up to the formula limit, and no condonation or litigation is normally needed. Then we can come to Group B. The people, the employees who roughly retired between 2018 to 2023, that is assessment year 2019-20 to 2023-24. They fall still within 5 years window. In these cases, there is a strong arguable case backed by several ITAT decisions, including the Mumbai ITAT to claim higher exemption up to rupees 25 lakh by filing condonation application under section 1192B and, if permitted, filing revised return claiming the larger exemption. Success is not guaranteed and depends on whether the case is still within the 5-year limit and the approach of the local CIT, and further any binding High Court decision in the state. Then we can come to Group C. This group belongs to older retirees, that is from 2016 to 2018. That means assessment year 2017-18 and 2018-19. Many of these retirees are now time barred even for section 1192B, as shown by the Rajkot rejection. Realistically, only a High Court writ or a future All India relaxation by CBDT could help. Both uncertain and often not practical for individual retirees. So we can say there is absolutely no basis for blanket promise. Any statement that all retirees from 1116 automatically get the rupees 25 lakh exemption without any rectification or condonation or an appeal is not legally correct on the basis of current notifications and judgments. So what step-by-step course of action can be taken by the retirees? Step 1, check your retirement year and assessment year. Note your retirement date and the relevant assessment year. Compare with the 5-year limit from CBDT Circular 11/2024. Step 2, gather documents, retirement letter and leave encashment details, Form 16 for that assessment year, copy of the original ITR and intimation under section 1431, and step 3 is consult a competent tax expert. Show them the documents, draft condonation format and recent ITAT orders like Balakram, Hiranand, Lohana. You have to show them and take a personalized view on whether your case is still within time and worth pursuing. Then step 4. File condonation application if within time. Submit a detailed section 1192B application to the jurisdictional PCIT or CIT explaining genuine hardship, confusion of law, and reliance on the new ITAT decisions. If approved, file a revised ITR online claiming the higher exemption and refund. Then, if the condonation is rejected, for pure 1192B rejections, there is usually no direct appeal to ITAT. The remedy will normally lie for a writ petition before the High Court, which needs legal advice and has costs and uncertainties. This is generally practical only for the significant amounts and relatively recent years. So, should have calm expectations and avoid over-excitement. Before closing, I would like to say one important emotional and practical point also. Point number 1, over-enthusiasm based on WhatsApp forward partial information can create unnecessary excitement, false hopes, and disappointment, particularly for elderly retirees. Point number 2, the documents and judgments show genuine possibilities for some recent retirees and hard limits for others. Both realities must be accepted with calm mind. The intention of all these notes and this video is to help respected retirees take well-informed, realistic decisions, not to discourage them, but to protect them from avoidable frustration. If this explanation has helped You are humbly requested to share it only with a clear message. Law is clearly favorable for post 1st April 2023 retirees. There is a litigation-based possibility for some recent earlier years subject to time limits. Third one, there is no universal automatic retrospective relief for all from 1st of January 2016. I also request you to please always consult your own tax advisor with your documents before taking any steps. With warm regards to all senior colleagues and best wishes for your health and peace of mind. Thank you for watching.